We're now at 4.5. So obviously, the more interest rates decrease, the more the market picks up because it makes financing those assets more and more possible.
Have you been thinking about buying your first rental property for some time, or do you already own a bunch of properties? Well, fellow investors, you found the right location to listen and learn from others' successes. Welcome to The Very Real Estate Effect with your host, Axel Monsaingeon.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today we're really just going to be talking about Quebec, so hold on. I have some stats to share. We'll do a little bit of a market overview. And before we dive into it, I got two things. First of all, last week did an episode about the impact of basically climate change and how what's happening in Europe and how listings are made. And right after this episode, I had a top expert from Europe who now lives in Quebec, who called me. We talked about it, and I've scheduled to have him for 2 episodes. We're recording in a few weeks, and he's going to be able to give us a lot of background information about what's happening in Europe, what's coming to Canada and North America, and that's how that's going to be impacting the real estate market and some of the decisions that you might be making over the next few months as you are investing and increasing your portfolio and buying more property. So stay tuned. I'm really excited for that. Second, we had an event this week with the Equity Builders Club. It was really fun. It was in the Old Port. We had a great time. And I had a lot of questions about, hey, what do you think about the market right now? What's going on? And so I thought I would take some of the stats from our friends at PMML from their market report and share it with you because it's actually really insightful to see that the market is picking back up. It's not a surprise. The cost per door has been fairly stable, and I'm going to go dive into more details. So before I start, I just want to be totally upfront. All of this data comes from PMML, from their market report. The data is actually from April 23 to end of March 2024. So I don't have the Q2 and Q3 numbers yet, but it's still giving a good trend. And also, like, by talking to people, talking to other investors, it kind of corroborates what we've been seeing with the numbers. So as a ballpark, basically here it is. Like, just in the Montreal, so that's on the island of Montreal, in the year finishing in Q1, so in March 2024, we had $1.7 billion worth of transaction. And on this, the average cost per door, so depending on the category size, okay, so that goes from 5 to 11, 12 to 25, or 24, 24 to, I think, 75 units, and then 75 and above. So all of the multifamily combined, the average cost per door was $175,000. So whenever you're looking at properties, think about that when you're doing your numbers, whether you're looking at a sixplex, whether you're looking at a 12 unit, a 15 unit. Obviously, there's going to be a lot of variables for that price per door, but just know that on average, on the island of Montreal, we were at 175, and gross revenue multiplier of basically 16.3 to be accurate. So the gross revenue multiplier, that's just basically taking the price divided by revenue, gross revenue. Okay, you don't take any expenses into account. And then on this category, so on the island of Montreal, we were at a 4.03 cap rate. So basically a 4 cap. Which is a slight decrease. It was more around 4.10 before that, but it's made it back just above 4. And again, that's all of the transactions on the island of Montreal over the 1-year period finishing in March 2024. So since then, there's been a bit of evolution, but it's still very representative. Now, remember that at that time, we were still at a 5% interest rate. We did not have the two decreases that we saw over the last month and a half or 2 months. We're now at 4.5. So obviously, the more interest rates decrease, the more the market picks up because it makes financing those assets more and more possible. So again, 175 cost per door on average on the island of Montreal and a gross revenue multiplier of 16. Now, it's always interesting to go see a little bit per category. So now let's dive into we'll stay into multifamily, but we'll go look at the different building sizes. So for example, on the 5 to 11, the cost per door, this is throughout Quebec now, okay? It's not just Montreal. It's throughout Quebec. The cost per door was 134. So obviously in Montreal, I just said it was 175, but if you're thinking of in Sherbrooke, if you're thinking of Trois-Rivières, if you're thinking of smaller cities, well, the price is lower. So on average in Quebec, on the 5 to 11 unit building size, the cost per door was 134 for a gross revenue multiplier of roughly 15. And a cap rate of 4.2. Now, on the 12 to 24, the cost per door was 131, so slightly lower, and a cap rate of 4. Then for the 25 to 74 units in the same building, the cost was 162 per door for a cap rate of 4.1. And then on the 75 units and above, the cost per door was 187. Now, you may be wondering, how come as we increase in building size, the actual cost per door goes up? I would think that, with economies of scale, it goes down. And that would be reasonable thinking. However, and that's a variable that we'll go into a little bit later, you have to take into account the year of construction, because larger buildings are usually built more recently. And also, as you go in bigger building size, you go from wood and brick structure to concrete, and concrete is always more expensive. So that's why that cost per door is significantly higher as well. Okay, now let's look at the stats when it comes to the net profitability, because that's really what's important. That's what people want to put in their pocket, and that's how they think about it. So I'm not going to be talking about, in this case, the cap rate. I'm going to be talking about the net revenue multiplier. So that's the price of the property divided by net operating income. Okay, so that would be the cap rate, but then the reverse is the net revenue multiplier. So whether we say it's a multiplier of 20 or whether it's a 5 cap, it's the same thing. Okay, same, just the reverse. So there's different categories. What is consistent though, so for example, in Q1 2024, the gross revenue the net revenue multiplier was 23.5. Now, it's a loose statistic in terms of it's so type of building dependent, whether you're in a small, so 5 to 11, or whether you're in a large, even though in this case it's really like 23.6 versus 23.4. There's actually very little difference. There's a little bit more variance with the 12 to 24 units that were at 24.8, so basically 25. But that's about it. Overall, profitability of the buildings have slightly increased. So then if we look at the cap rate, overall from let's say both combined, we went from about 4 to about 4.2. So it's slightly improving, but it's so dependent on the type of building, the location, and so on and so forth. I just spoke about the difference between wood structure and concrete. So right now in Quebec, the projects in terms of new construction, some of the only projects that work are 3 stories, wood and brick structure, no indoor parking, because the cost of money is higher. Some of the only types of projects where there's just enough profitability for developers for it to be worth it. Now, as an example, on the last 12 months, same thing, ending March 2024, a concrete structure was $182,000 per door. Okay. Whereas a brick and wood was 135. So there's basically a 40K, 50K difference. And that's really just for the type of material, because just concrete is just more expensive. However, this was for older buildings. When you look at new buildings, and in this case, new buildings is considered 2014 and above, so less than 10 years. Overall, on the cost per door, we're at 231. And that's not surprising because cost of material is higher. New construction, like right now, new construction price per door is 250 to 300, even 350 in some cases. And I've looked at projects in Gatineau where it was 370,000 new, but a beautiful unit in a 36 unit building, 4 floors, elevator, and everything. So, it does make sense. Okay, now let's look at the new construction market. So that's construction that is less than 10 years old. So basically everything that was built after 2014. Now, there's a lot of demand for this type of building because I've already done some episodes about this, because newer built usually attract a better clientele. Rents are higher. There's very little capex and maintenance, better insulated with all the climate change items that are coming. It's a very desirable asset class. Now, over the last year, really the price now for new build, same thing. Like in 2023, we're at about 215. We're now at about 230, 235. It's slightly increasing. It's obviously much higher. So as you're making decisions, just keep that number in mind. So overall, what's really to be remembered, I find, is if you're looking at buildings in Montreal, think of about 135,000, 175,000 per door, with a 16 gross revenue multiplier. You can go from there. You can just take the price divided by the gross revenue, just to give you an idea of what a building should be worth right now. Now, as you step off the island of Montreal, obviously the stats are a bit different. You look at Longueuil and Rive-Sud, you're at 147. All the data is available on the PMML market report. I highly encourage you to go download it. You go to pmml.ca and then you go look for market report. It's available over there. And the reason this is important to talk for you to be aware of it is that there's been 2 decreases in interest rates already. It's forecasted that there's going to be at least another 2 before the end of the year. So the Bank of Canada rate will be at 4, coming from 5 at the beginning of 2024. Now, we think, the market definitely had slowed down. It's picking up. Yesterday, I was talking to another buyer who's, this is an owner-occupant who's looking to buy a unit in Montreal. She's on her 6th offer, and everything is being outbidded up to, I think, 75 or 100K. The market is hot already. Now, obviously, this is an owner-occupant. You're an investor, and you're looking for rental plexes. It's already picked up, and the more interest rates are going to go down, the more demand is going to be fueled by all those who've been waiting since a year and a half, who have money stashed away and are looking for their next property. So, as I was discussing with Maha at the event this week, don't wait. If you're interested in investing in real estate, start now. Talk to a broker, get educated, look at the market. If you want to know where to start, reach out to Terry and I with Equity Builders. We may be able to help you. You can join the mastermind if you're interested in talking with like-minded individuals. And if not, we'll just have a fun chat. So thank you very much. Stay tuned for next week. Have a wonderful day.